It seems even the stock buyback isn't going to save Mullen at the moment, but who knows, perhaps things can turn around. Hi again, everyone. I hope you're doing really well, but if you're following Mullen, you're probably not doing so well. We've just had a second consecutive day of nearly 20% of the stock value being wiped out, following on from what happened on Thursday. That's, it's pretty tough to digest because it's a second reverse stock split in, under 6 months, and there's a $25 million buyback, which is being utilized, as well as key fees like Dave Michery are buying back stocks as well. And it's not enough to save the company. This is all, in light of the fact that the company has a higher book value per share than what it's actually trading at. So it's really, really hard to kind of really gauge what's going on. It's kind of pretty crazy right now. Anyway, I don't know if it gives you any sort of peace of mind, but I've been reading one of the founders of Walmart's biography about his story, and he sort of came out with this line that's saying, like, in their early days, because they didn't get treated very well by the stock market, they kind of said, well, we can focus on what we're doing and not pay as much attention to what's going on in the financial markets, because it doesn't necessarily reflect what's going on with the company. And I do think that is actually true to an extent with Mullen Automotive. Yes, there are some issues with the company. There's no denying that, but the way the market is treating it, with all the overwhelming short interest in the stock and what that's doing to pound down the stock price, it's not really being valued perhaps how it should be by the market. So, if you're long term on Mullen, and I know a lot of you guys out here are, perhaps that can give you some peace of mind. But at the same time, you got to look at, I'm talking about a company like Walmart here at the moment, and they become profitable basically from day one once they open up a shop, whereas Mullen Automotive is probably going to still take some years to be profitable. They're still a more speculative business anyway. And we're talking about the 70s versus the 2020s, so it's 50-year difference, and the markets are a bit different. They are very much like a roller coaster these days by comparison, even though people would have thought that they were like a roller coaster back then. Everything's just faster and crazier, I suppose. Look, it's a tough one to swallow, because the information has come out that David Michery's actually bought back over 100,000 shares at an average price of 98 cents. And, over $3 million of the buyback has actually been utilized already. And, while it seemed like it was propping up the stock a little bit those first two or 3 days, we've now gone on and had, is that 3 consecutive days below $1 now? I can't remember if it's 2 or 3. I think it's 3, yeah, because we had 98 cents, then about 80 cents, and now we're down around 64 cents per share. So it's, we're in a slippery place. There's still the potential for the company to be able to rally back above $1 and meet its NASDAQ compliance by September 6th, keeping in mind that there is a Labor Day public holiday, incidentally on my birthday, September 4. So there's still 10 trading days there, so there's the possibility that they can regain compliance. But as you see the stock price fall, it's it really looks like a long way back. The good news is, though, that if they start utilizing more of the buyback and there's more shares bought back by insiders, because of the beaten down share price, it can actually have a more exponential effect on the stock price. So there is some comfort there that there's the possibility of a bit of a springboard rebound. Remains to be seen whether it's going to happen, because right now it's quite reminiscent of the last reverse stock split, where we kind of saw consecutive days of the stock losing about 20% and eventually falling back down to around that 10-11 cent per share mark. And any little bits of PR the company put out that were remotely positive kind of only had maybe little blips in the stock price, which just eventually got beaten down the next day. Plus we also had the whole backdrop of Lawrence Harge and what he was doing. So the PR at the moment, there's not much more that the company can say other than production started and they're starting to deliver vehicles. They've given more and more hints about that. So I think even that's not going to have a strong impression on the stock price. I think it's just, we're in a bad place because the market sentiment is so poor around Mullen at the moment. Still around 20% of the float is held short, which is continue to put pressure on the stock, and even in the aftermarket we managed to edge down ever so slightly again. It is the weekend, there's time to sort of regroup. It's a tough one. Like I said the other day, I managed to actually do a bit of a swing trade when the stock fell to 90 cents in the aftermarket and sold it at 98 cents the following pre-market, which at the time was quite a good move because I managed to basically restore the dollar value of my position, which I started earlier this year. However, since then, the stock has rode down quite fast. So I'm back to being about 40% down in the dollar value of my position. Again, this is a very speculative play that I've got, and it's not a big position in my portfolio. So I've kind of gone into it thinking I am going to lose money, but it gets really hard at times because the more and more we have days like this and yesterday, and the fact that despite everything the company's throwing at its stock price, it can't manage to get back to that level of compliance. Really makes it hard, and you consider like, am I doing the right thing? Am I staying in the stock for the right reasons? Yeah. Anyway, so it becomes quite challenging to stomach. And like this whole stock buyback is it's not a good thing from the company that they're using basically money that was raised from diluting shareholders to buy back stock, and just to stay compliant with the Nasdaq. Obviously the benefits of the company being on the Nasdaq is that it's easy for them to raise money, and like what's the next step once they can't once this $25 million evaporates and they're unable to do anything. We've just spent $25 million, which came at the cost of dilution just to try and stay on the Nasdaq, and at this rate we might not actually survive this warning. I don't think, look, even if we don't get compliance by September 6th, it's not going to be like we're immediately kicked off the Nasdaq. There's still other processes that go on, and there's like you can like challenge it, and there's like a whole procedure there, and like I've seen companies successfully challenge that before. Yeah, I guess like one thing I think of, like when the whole reverse stock split was voted on, I kind of thought like the right move from the company might have been to actually just go really big, max it out to 1 for 100. Don't worry about the 2 years of being able to appeal things, but just wipe out the liquidity in the stock, and make it stupid for it to run down to below $1 again. That's what Excel Technologies did. They've been floating around $5 or $6, sometimes even up at around $7 per share these days, and that's kind of worked for them. It's obviously brutal for shareholders, but it just gets over that hurdle of staying Nasdaq compliant. Yeah. Anyway, I guess we'll just have to wait and see what happens on Monday. I'll probably come back over the weekend and do some more of my speculative videos about the what ifs and what can the stock possibly do going forward. But yeah, for now, I'll leave it at that for Friday. Yeah. I hope everything's going well. Share your thoughts on Friday and Thursday and this week in general about Mullen Automotive. Let me know how you're feeling about things. Yeah, otherwise have a great weekend, and may the markets trade in your favor. Cheers.